Welcome to the Business Finance Bulletin, episode 296. Welcome again to the latest Business Finance Bulletin. With me, Rob Warlow from Business Loan Services, the commercial finance experts. In this bulletin, increase in loans distributed under the Coronavirus Business Interruption Loan Scheme, more support for firms locked out of the loan scheme, and the economic impact of the coronavirus. We'll start this week's bulletin by taking a look at how the Coronavirus Business Interruption Loan Scheme is performing. How many businesses are benefiting from government support? Now, every Wednesday, UK Finance, which is an umbrella organisation for all of the major lenders in the UK, releases figures on how this scheme is performing. And the latest figures, as of the 21st of April, reveal that in total there were 16,624 loans approved. That's out of 36,000 applications. Now that's an approval rate of 46%. Now that's a massive improvement on the week before when the approval rate stood at just 21%. In terms of the total amount of money now being lent out, in total it now stands at 2.8 billion. And in 1 week it had increased by 1.45 billion. So we can see a large increase in the approval rate, a large jump in just 1 week of total money lent under the scheme. So what's that telling us? Well, clearly the logjam is starting to unlock. More applications are now being reviewed and, of course, being approved. But naturally, that still leaves quite a few businesses out in the cold. Still 50% of them are not getting the funding that they want. Now, why is this? Well, we've been getting calls over the week from business owners who, first of all, confused about the scheme. Typically in terms of the information and the volume of information that's required. But also many of them are now starting to be rejected. Why? Well, in some cases they presented the case not in their best light. You've really got to understand your figures and present a very compelling case, particularly showing why and how you've been impacted by the coronavirus. You've got to remember, the scheme is not there for business as usual costs. It is really for these really critical expenses that you have to have covered, and all are derived from the fact that the coronavirus has affected your business. So don't forget, if you do want some support in putting your applications together, that's one thing that we can help you with. So just get in touch, info@businessloanservices.co.uk. Looking at the scheme generally, an interesting survey came out from the Institute of Directors. They surveyed 900 businesses, and interestingly 47% of them said that they felt that the scheme was not suitable for them. Why? Well, it's probably because they were reluctant to take on debt. We've spoken to many business owners who do have this reluctance. At the end of the day, even though you're not paying anything for the first year, this time next year, those repayments will kick in. So it's not free money. You have to pay it back. Also, 10% of them surveyed they actually got applications in. 25% of them said that they just weren't eligible at all. Now that means they probably made losses in 2019. And as we've discussed in previous videos, one of the key central core of this scheme is that you had to have a viable business in 2019. Also in this survey, it's showing that 2% of business owners say they've been rejected and just 2% of them have been successful. So quite a low rate. So as you can see, in overall, there's some progress being made, but a lot more to do in terms of getting that money out of the door. Let's move on now to take a look at the tweaks and enhancements that are being made to the CBILS scheme. Now, as I mentioned in the previous segment, one of the key central parts of the CBILS scheme is that you had to have a viable business as of December 2019. In other words, you were making money and you had a solvent balance sheet. Now, of course, this does leave out innovative and high-tech firms. These are businesses that are typically pre-revenue and pre-profit, and the government is conscious that they don't want to switch these firms off. They are very important to the growth of the economy when we get out of these troubled times. So in order to help these firms, the British Business Bank and the government have launched a future fund. Now this is a scheme with a total of £250 million being set aside for these firms that are locked out of CBILS. Now applications will be open from May and typically it'll run until September. However, the full details are not available yet, but one of the key things is that £250 million will have to be matched by private investors. So if you are looking to access the scheme, you will need another investor to sit alongside you in order to match funds accessed under that scheme. Also, the government has announced via the British Business Bank and its subsidiary, British Business Investment, a £10 million fund which has been given to the Startup Fund. So again, these are out there to support startup companies or early stage companies. So a good sign of support there for businesses that are just starting out on their journey. And lastly, one change which is eagerly anticipated, not sure whether it's going to happen, is where the Chancellor is really now under pressure to change the CBILS scheme so that they give 100% guarantee to banks for loans less than £25,000. At the moment, as you know, the government is guaranteeing up to 80% of the loan, but so for those smaller businesses, in order to encourage the banks to support, there is calls for the Chancellor to expand it to 100% guarantee. Now, whether this will happen or not, who knows? But if it does, it will certainly help businesses at the lower end of the market. To close this bulletin, let's take a look at the economic impact of the lockdown and the coronavirus. A survey from BFB Financial Services has revealed that 77% of business owners say that their sales have dropped. More worryingly, a third of them say they only have cash sufficient to keep them in business until the end of July. But what about the impact on day-to-day operations? Well, under that survey, 39% of businesses said they've already ceased or paused operations completely in order to preserve cash and keep overheads under control. 38% of them have said that they have got a partial shutdown, again, in order to preserve cash and keep overheads under control. Begbie's Trainer, the insolvency and turnaround specialist, as part of their quarterly red flag alert, has reported a massive jump in those businesses declaring themselves to be in significant financial distress. The number of firms that kind of classify themselves as this is 509,000. That's the highest it's ever been. That's to the end of March. But also, there's been a 10% increase in the number of businesses who now say that they are in critical financial distress. And obviously, that's now going to start showing its way through to insolvencies probably towards the remainder of this year. Now, of course, if you are in financial distress, the key thing you can do is to seek appropriate advice, particularly from your accountant or a licensed insolvency practitioner. It's all about making sure that you get the right support team around you. Well, that's it for another bulletin. I hope you enjoyed it and found it useful. And if you did, please don't forget to give it a like and a share. So that's it. I look forward to being with you again next time. In the meantime, have a great, successful and profitable week.